Okay, in our last video, 51, we actually did just an introduction of the concept of sector rotation, how to think about when you see outperformance in one sector versus another, and if that outperformance, sometimes it can tell you a lot about the underlying nature of the economy. And so that's really, really important, sort of big subject, and we really only scratched the surface in the last video. This video, I'm going to just give you a few steps that you can take that you can use to broaden your context about different industry sectors and start getting better at keeping an eye on things like this. So what I tell people to do is it's very, very simple. All you got to do is just set up a watch list. You don't have to buy any stocks. Just set up a watch list of specific tickers that are representative members of given sectors that you want to follow. And I recommend to people usually to start with 2 or 3 sectors to begin. And then later you can add more and more sectors as you get more and more context. So, and then first, what you probably are going to want to do is pick a sector that is economically sensitive. So, for example, industrials or capital goods. So like Honeywell or Emerson Electric or John Deere Tractor, something like that. And then another sector that is not economically sensitive. So that would be like consumer products, for example, or pharmaceuticals. These are good examples of industries that don't really move up and down with the economy. And when you see, then you pick your representative tickers for each of these sectors, and you can see when the economy starts to accelerate, you're going to see the types of rotations that happen. And then likewise, the opposite, when the economy maybe starts to slow down or enter recession, you'll see the opposite, a rotation into the non-cyclical or the non-economically sensitive sectors. And so this is just stuff that you get context for as you watch it. You load up your tickers in a watch list and just keep an eye on things and have a feel for where the prices are and which stocks are up in a given day or week versus others. And then as you get better and get more context at this, you can add additional sectors. So maybe you decide that you want to pay attention to interest rates, and so you want to start looking at some representative banking names. And likewise, maybe you want to start thinking about inflation risks, and you want to think about, okay, where could I find some sectors that would do better when inflation hits? And that would be obviously commodities. So you have some representative, maybe mining companies or commodity-related companies. So these are the sort of the ways that you can go ahead and pick different sectors. And then also another nuance is there's a lot of potential granularity within a given sector. So for example, in banking, there's the biggest banks, JP Morgan, Wells, there's mid-sized banks, they call them money-centered banks, and then there's sort of your smaller, more local or even regional banks, and then you have banks in other countries too, and so you can kind of look at the fortunes of other countries by using their banking sector, or it'll give you some context on interest rate scenarios in those countries. And so you can get very granular and kind of get really, really specific, but you don't need to at this stage. You can just sort of pick a few representative main names and have it on your watch list and track this stuff. So that's it. This is basically your gradual process of getting more and more context for learning about sectors and learn how they move relative to each other given the economic backdrop. And you'll start to learn to be able to read that, and it'll tell you what's going on in the underlying economy. So as always, I hope these videos are helpful, and thanks for watching.